Hello, this is Dean Malone with CompsFX. Hope you're doing well today and again some good trades. We've seen the start of 2012 with some pairs making strong trending moves while other currency pairs are sideways, stuck in daily ranges. And so today what I want to talk about is a little bit about both. Be careful of the strong trending pairs like the euro dollar. Last week the CFTC put out a report that the market overall is net short the euro dollar. Now, be careful in this situation. When the market goes strong one way or the other, the interbank dealers have a tendency to play back against that overall direction. In this case, with the euro dollar making a strong move down all the way below the 127 mark, there are still options out there in the market around 128, 129, and 130 area. We can see a push back up by the interbank market, and that would be a short squeeze. Again, for an interbank dealer, the easy money for him is going to be getting those stop loss orders of those who are short the market. So I suspect the potential to see this bounce back up towards that 129, that 130. But be cognizant that if we start breaking down and hitting sell stops below, that's going to drive the market down a bit more. However, at the same time, there's going to be certain institutions like the BIS today that was seen buying the euro back up, and that caused a bit of short squeeze intraday. If you look at the market last night in the Asian session, the euro came down and then made a bounce back up. So be careful of that. Now let's take a look at the daily range situation going on in some other pairs. You can see in the pound dollar we have this sideways movement, not getting much direction, an attempt up to about the 160, 160 area back in October, but since then we've dropped back down between that 156 and 154 level and just more or less going sideways for the last 2 or 3 months. We're going to be breaking this at some point. Do we break lower or do we break higher? And this is what's got some traders questioning what to do. My answer to that is simply to draw out your highs and lows, find a chart pattern from the daily perspective, and then work your way intraday. In the intraday charts, then look for chart pattern setups that you can actively trade. Now my suggestion to some traders is if it's range bound, if it's sideways, and you drop down to a 4-hour chart and the market's stuck inside the price action channel like it is here, let go of the mouse, step away from the keyboard, and go find another pair to trade. So for today, most of the day, we were caught right in this little range area. There's no trading there. What you can do, though, is make note of highs and lows. You can see in this case, we have higher lows, and we have some lower highs coming across like so. Now, what you can do is find a midpoint or find a previous range. For instance, you can see right back over here, we kind of have a previous range right in that area. And that was matched up with a range back in this area. So my thought is, make note of the average bottom of the range and make note of the average high of the range. Let's say somewhere right about there, let's say. So what we'd be looking for if we drop down lower, let's say that we drop down to the 30-minute chart, what I'm going to be looking for, I'll tighten this up so you can see, what I'm going to be looking for is, do we bounce off the bottom of the previous ranges we've had and give us a double top formation and down? Or do we get in the middle of this little area right here? And you can see that when we got in the middle here, the market didn't do anything. Okay? When we got above it, though, the market, pushed above back here, went up to that high point, and then we settled back down. So my thinking is this: look for a possible double top, and then a bounce off this back to the downside. The market baseline is continuing to climb higher, so we could see a push back up in this area, back up over to this ranged area right here. If it breaks across, then we look for a continuation potentially up towards the high point here from our daily range. So look for these daily setups. Now today in the live active trade room, I commented to folks that we had a beautiful 1, 2, 3 pattern setup. So we had this high point, we went down this low point, we did a 618, and I shorted the pound in the live active trade room today. I shorted at 54.65 and caught the move back down towards the 38.2. That was a nice setup. So what I'm doing here is I'm looking at the daily range, going down to an intraday chart, and looking for a potential chart pattern within that daily range. Realizing that the market, if the market were to break lower today, I already had a bottom in mind based upon what the daily range is showing me. Okay? So again, look at your daily pattern. Let's say, for instance, we have the Aussie dollar here. Draw out what pattern you see from the daily perspective. Okay, coming across these tops here. Then work your way to an intraday chart. And you can see here from the intraday perspective, it looks like that's about the midpoint. And you can see how the Aussie dollar literally came off the top, came down about the midpoint. Notice the previous range the market had back here. So we go to the range low, worked our way back up, and look what this did. It came back down, and what did it test? It tested near the range high back here. And now we're working off of it. Then I expect the market to possibly push back up, test the 310 or the 300 to 315 area somewhere right in here. If it breaks through, make sure it's a true break because it'll come back down, test this. If it's not a true break, what it'll do is it'll pin high, come down, maybe pin high again, but still close below the trend line, then roll back over, and you're set up for a potential double top pattern. Take a look at the TDI. See, the green and the red are below the market baseline. So when price moves up, there's a potential that we're going to run into the direction of the overall market. We might just hit the market baseline here and take a bounce off of it, similar to what happened over here. Come up to it, bounce off of it, and come back down. So folks, when you find yourself in a sideways daily range, mark your daily chart, go to the intraday chart, like a 4-hour, find a midpoint or a range, then drop down to even a lower chart, like a 30-minute or a 15-minute, and look for your intraday chart patterns, double tops, double bottoms, something like that, and then trade off of those back towards the target given by the daily charts. Well, folks, this is Dean Malone with Compass FX. I hope some of this information will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.